So we'll be chatting with Ritesh Chandra, Managing Partner and Head of Avendus Future Leaders Fund, to talk a little bit more about the overall trends that we're observing here, as well as the outlook for the space. Thank you so much for taking the time out and joining in. Ritesh, interesting that, this fund is looking at consumers within the late stage private companies, consumer and financial services segments. I wanted to understand from you, within the financial services, given the kind of backdrop that we're working with, what exactly is the outlook on the space as a whole?
See, I think the market is obviously going through some stress at this point in time. And I think part of it is legacy issues which have not been resolved yet. My sense is that over a period of time, as the liability profile of these institutions and these NBFCs becomes much more robust, some of these problems will kind of go away. But I do expect some pressure over the next 2 quarters at least on the especially on the liability side of most of these financial services companies.
Ritesh, we have a lot of mid-sized companies as well now with respect to GST that we've seen, digitization. All of these are really coming to the fore. What is the outlook for some of these mid-sized businesses? Where exactly is it that you are seeing opportunity? Any specific, subsectors?
Sure. So I think within the consumer space, we are very, very bullish on food and apparel. I think these are two segments which basically constitute the bulk of the spending for most Indian individuals. I think what was happening historically was that consumers did not have the capacity to pay or the ability to procure these goods. What's changed over the last, I would say, a couple of years is the fact that as per capitas are going up, the capacity to pay is becoming far more prevalent. And secondly, with the penetration of e-commerce, availability is no longer a question. So what we are seeing across the board is consumers in tier 2, tier 3 towns, as and when they earn a little bit more, are spending on discretionary consumption rather than on just savings. The trend has actually got accelerated post GST as well, because what's happened is that post GST there's been a huge shift which was already happening from unbranded to branded goods. And GST has kind of helped in accelerating that trend. So in some categories, you see this growth in segments, which is quite spectacular, but largely not so much driven by consumption demand, but by a shift in the unbranded to branded category. So take examples of categories like masalas, for example, spices. That category is growing at 30-35%, largely because of shift from unbranded to unbranded. Unbranded to branded, and that trend is likely to continue over a period of time.
Ritesh, also I wanted to talk a little bit about your own AIF, the Future Leaders Fund. Help us understand a little bit about what this fund is all about, what kind of companies and segments of the market that you look at.
Sure. So, the genesis of this fund is largely in terms of taking minority positions in late-stage market-leading companies. We saw a lot of gaps in the market today in terms of where opportunities present themselves, tactical opportunities present themselves in terms of fundraising. These could be promoters seeking some small liquidity, employees wanting to sell their ESOPs. There are gaps, white spaces in the market that we saw. The idea behind this fund is to back market-leading companies by capitalizing on these tactical opportunities. So we intend to take minority stakes anywhere aggregating between 50 to 75 to 100 crores in late-stage companies and hold them for a period of between 3 to 4 years until the next liquidity event happens. So the idea, this market today is being serviced by the HNI community. These are deals that today the HNI market is witnessing, but there's no institutional mechanism, there was no institutional fund which was tapping these opportunities. The idea behind this fund is to tap onto these opportunities as and when they arise.
Ritesh, can you tell us a little bit more about the profitability profile of the companies which you are addressing at your drawing board? What exactly are the parameters that you look at?
Sure. So, this is, as I call, a very white-haired fund. We look at traditional profitability ratios of return on capital employed, return on equity very, very closely. We are very focused on the growth in the businesses. A lot of companies, consumer companies in India, have not delivered growth in the past. So one of the things that we are very particular about is growth and profitable growth at that. So the couple of criteria that we've kept for ourselves is that we would look at companies, again, this is only focused on private companies, but we would look at companies at least with a valuation of $200 million plus. We would look at high return on capital employed, 18-20% plus companies. We certainly want to look at high growth companies. As I mentioned, we are only focused on two sectors out of this fund, which is consumer and financial services. Within consumer, we would cover the entire ambit of food, apparel, FMCG, anything which is B2C facing from that. And within financial services, it covers the entire gamut of banks, NBFCs, insurance companies, etc.
Yeah, and I wanted to probe that in greater detail, Ritesh, because, among financials, wanted to understand what kind of plays are you looking at? Because we also understand that you are looking at some smaller south-based banks, for instance, which are now seeing some changes happen, but have not really done anything big in the last few years. Are these small south-based banks on your radar as well?
So yes, they are. But let me, I'll tell you what the hypothesis is. These new age banks are actually using digital as literally a competitive advantage. And I think we are very, very bullish about some of these new age banks which have come about. They are still in the private domain. They are not listed banks. Some of these small finance banks are very exciting, and that's something that we are very keenly evaluating. They have, over a period of time, over the last couple of years, built up a very sizable deposit base, and the loan book continues to grow very attractively. So those present some interesting opportunities that we are looking at. Concurrently, we are also very focused on the NBFC space. There are some differentiated models which are emerging, very vertically focused models which are emerging. We want to focus on those. But as I mentioned, right now we are slightly cautious on the financial space, largely because we want to see how the liability challenge before these NBFCs plays out. But over a period of time, I think that's a segment that we are very excited about.
Okay. And finally, can you just also tell us, at your AIF, at the fund, are there any other type of specific companies that you're looking at, and what is the kind of investment interest in the two sectors that y'all are looking at closely, which is financials and consumption?
Yeah. So I think we are looking, as I mentioned, at a couple of very interesting consumer companies. The interest is very, very strong. I think people are genuinely convinced about the consumption story in India, despite what's happened in the last 3 quarters. I think we've just scratched the surface as regards consumption is concerned. Historically, consumption in India has grown at about 7-8%. My sense is that as liquidity eases in the system, consumption is going to grow at about 7 to 10%. You already have the big boys, the levers, the Maricos and the Daburs. They are growing at in the mid-teens. But I think there are specific niches within consumption which, in our estimate, are expected to grow at 20-25%. And those are the very exciting, opportunities that we want to tap.
All right. Thanks so much for joining us this morning, Ritesh. Always a pleasure speaking with you. And thanks for joining us on.
Thank you. Thank you. My pleasure.